Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Friday, June 17th, 6:56 p.m. New York time. Just completed another full week in the U.S. markets. So let's look at the Dow Jones Industrial Average Index compared to the 30 company stocks listed in the index. Note, U.S. Dow Jones Industrial Average Index is one of the oldest stock indexes in the United States. It's one of several current stock indexes that are viewed at to get an indicator of the market pulse, market breadth, direction. And note, the Dow Jones Industrial Average, since the creation, has changed over time of the number of stocks listed in the index, as well as the current companies listed in the index. So all the original companies that are listed in the index are not necessarily in it any longer, as well the index has grown. It was not originally 30 stocks in the index. Note also that the Dow Jones Industrial Index is part of the S&P 500 cash index. Well, what does that mean? Well, the S&P 500 has 500 companies listed in it and has several indexes in that index. So the S&P 500, again, has one of the indexes, which is the Dow 30 in there. So we're looking here, each candle being a week. We're getting a 1-year duration. And let's take this out for a longer duration. 3 years, 3 years. There's a bottom over 3 years, and here's the high for 3 years. The bottom of 3 years occurred back here in 2020 for this 3-year period. And for the 3-year period, the high was this year in January. That's amazing. Yeah, amazing. So now we already took out the low this year, and we're in new lows this year. We're inside the range because here's the low of last year. Let me draw a little horizontal line so you can identify. There's a low of last year. Going to zoom in. That low last year was the 1st of January. Now looking now here, we took it out. So we took out the low of last year. Yep. We also took out this swing low, which I have there. Broke that this week, right there. That was a swing low. That was a price direction and a price level I was expecting the price to go down to. Don't know when. That was just the price I was expecting to go down to. And see a test there, a potential reverse or break. Again, that would be a trade signal there for either way. And it occurred there. Again, it would be a trade signal, the faster time frame, the lower time frame, depending on the candle. Let's remove this. So now we saw the Dow Jones took out the low this year, took out the low last year. Let's look at the index it trades in. Here's the S&P 500, same thing on weekly candles. S&P 500, new low for the year. Take it out to 3 years. Here's the low of last year. That was a swing point I was looking for. Let's label this 2021 low. On zoom out, go back in this year. Look at that. So we took out that swing low I was expecting. Move that. And we tested, oops. We tested the low of last year, went below it, but closed above it. I'm going to keep this line here, so I know. But right now the momentum looks like it's going to continue going lower. Small low wick on the bottom. Okay. The Dow Jones also a slow low wick. Now let's compare the 30 stocks in the Dow Jones. Here they are on the left, alphabetical order. And I'll go one by one, and you can look at the chart on the left, which would be the single stock, and the right is Dow Jones. And notice we want to identify on the stocks, single stocks, are we trending up or are we trending down? Do we take out the low of this year? Did we take out the low of last year? And that'll help determine where the leadership is. Well, we know right now the Dow is, yeah, we already identified it. Tested the low of last year. Took out the low this year. It's bearish bias. Apple, there's a high for the year. There's a low for the year. Bearish bias. I'm not even going to zoom in. I think we'll do this a quick video. Alpha, Mike, Golf, November. Interesting. Okay. Lower high, lower low for the week. The trend is down. Retracement inside this demand zone. It's testing the demand zone. And look, it closed above it. That's good. That's bullish bias. So now we want to get confirmation, have a follow through. Well, we'll see if that happens next time. But again, it's stronger because here's the low. It's stronger. It didn't take out the low. It's stronger than the Dow Jones. That's good. It could be doing better, but it's definitely stronger. Put that arrow there. Next, American Express, Alpha X-Ray Papa, new low for the year. Trend is down, lower low, lower high. Yep, buyers stepping in there. That's interesting. Remember, that's financials should be benefiting with the higher interest rates. We'll see. We shall see if it turns around. Let's put a little arrow there. Boeing, Bravo Alpha, new low for the year. Tested the swing low and rejected it. It's in consolidation phase. That's interesting. Why? The prior trend was down. Consolidation phase. This red candle was a bearish engulfing. The red candle engulfed the prior candle. The top of this trend, bearish engulfing, trade signal, trade short, and certainly worked well if you did it on a faster time frame, the lower time frame, the daily. Yep. Need to watch this one closely. See how it occurs. Plays out. Caterpillar, Charlie Alpha Tango. Well, it did certainly gap down for the week. There's a high, there's a low. We did not take out the low this year. So again, this is performing better than the Dow. It's still weak because the trend is still down. Charlie, Romeo, Mike. The low for the year was prior weeks down there. It's in a consolidation phase. It's still bearish bias. And is at that key demand zone from all the way back several years ago. I have drawn. Cisco, Charlie Sierra, Charlie Oscar. That consolidation phase. Very interesting. Small little candle, small trading range. Whereas most of the stocks we went by already had huge trading ranges. It closed green also, where it made a lower high, lower low. That trend is down. It's in this key demand zone where buyers are. Yeah, I would watch that carefully. Maybe a trading opportunity. And I'd like to see if this is the leadership. So if you look at all the stocks that are in the same industry, again, that's technology, but in technology, there's certain industries, and you look at those stocks and see if they're performing similar or better, and that's how you find out the stronger ones in that industry. It's called work. A lot of people don't do that. Well, let's say work smart. Everybody does work, but not everybody wants to work smart. Either they don't know, you don't know what you don't know. Yep. Interesting. We'll see how this turns around. I just found out another person today shared that they never heard of the stock ETF that trades for the S&P 500. The stock ETF is Sierra Papa Yankee, SPY. People didn't know you could buy that. So they were buying mutual funds all these years, thinking that was the place to go, paying large fees. And they just wanted to have a balanced index of the S&P 500. And they just found out today. Yeah, you don't know what you don't know. Charlie Victor X-ray. Wow. Huge impulse move down. Tested the midpoint of that prior candle. Bad shape. Bad shape. Took out that swing high. Yellow horizontal line. Went higher. Let's zoom in. Remember, this was the leadership for the year. Broke above it. Made a few higher highs and rolled over. Let's take off that swing line. Yep. So now I'm not surprised it tested the midpoint because that's why I had it drawn there, looking for a potential trade out there. Yep. So now that I have pullback, this may become the opportunity to be buying it. Again, do your due diligence, top down, and look for those price locations. Even if it does a further pull down, retracement, have some key levels where it may test. Let's label this here. Let's update this. There we go. And I need to label the midpoint of that so I know next time. Again, why is this down huge? Well, crude oil is down. Crude oil, good indicator. And this company obviously is an energy company, has a relationship to crude oil. There's that good correlation I'll speak about. If you're following oil, you know what happened today. And then you know the relationship, what happens here. There we go, midpoint. Potential upside. Yeah, we'll see if a retracement goes up there. There might be a trade signal there. Delta India Sierra, Disney, new low for the year. Yep, really bad shape, really bad shape. Broke below this consolidation, so they have a new staircase pattern, lower low. Serious problems. Dow, Delta Oscar Whiskey, lower low, lower high. That was the low of the year. It took it out, took out that swing low too. Let's remove these. And sure, I gotta label these. I'll do that label later. Look, 55 was acting as a key demand zone in the past. Tested and closed below it. Goldman Sachs, another financial. Yep, new low for the year. Home Depot, new low for the year. Broke below consolidation real bad. Because why? We had consolidation, breakdown, consolidation. So we had an ongoing staircase pattern, lower low. New staircase, deeper low. Awful. Hotel Oscar, November. This was a consolidation, and it broke below that. Now it's in the demand zone. Lower high, lower low. Momentum still to the downside. IBM took out that swing high. Remember, that was one of the leaders earlier this year. Let's remove that because it took that out. Reversed the momentum. So again, interesting. Closed green, lower low, lower high. Yep. Momentum. And look, this candle, I should have labeled that, but didn't. Tested midpoint somewhere around here. Might have closed around there. More research. Interesting. Intel, one of the worst industries. New low for the year. Not good. Bad shape. And if you watched my past video I made on technology stocks, I went over several industries and showed majority of them in this industry are bad shape. Johnson & Johnson, Juliet November, Juliet, lower low, lower high. The trend is down, working on a retracement. Financials, JP Morgan, new low for the year. Lower low, lower high, broke below the consolidation, coming into this prior gap, this river, this stream. Not surprised. Yeah. Kilo, Oscar, Coca-Cola. Momentum's down, trend is down, lower low, lower high. So here's the low for the year. That's where it's on target. Slow grind too. McDonald's, green for the week, tested midpoint, rejected it, rolled over inside this demand zone as expected. So if you took the short there, did very well because it rejected that. The rejection was there. Nice. 3M, Mike, November. Okay. New low for the year. Lower high, lower low. Look, we had the trend there, bearish, consolidation phase. And that, I'll zoom in. This consolidation phase did a slow guy retracement of midpoint of this big candle, rejected it, rejected all these candles, touched it, rejected, closed below it, showing as more bearish bias, looking for short opportunities. One could have gone short on the testing this midpoint, having you stop somewhere on top, either right on top or top of here. Yep. And then you had this red candle here, impulse move down, that broke below the swing low. Let's remove this. Nice. And then that trend continued going lower. Now it's new low for the year. Let's open this up. So again, when it took us to swing low, I labeled. Let's put that back. There we go. Leave that in there for now. That was a good place to take a trade signal. Let's zoom this out a little bit more. Yep. Key swing low from last year. Actually, from 2 years ago. Yep, it tested it and took it out and closed below it. Let's remove that. And still project it to come in here. So now that we knew that was a trade signal, let's put this on the faster time frame, which would be the daily time frame. If you're swing trading, look from that trade entry. There we go. That was a swing low, broke below it. Trade signal, took on short. And all these days you could have stayed short. Lower highs, lower lows. Very nice. You could have closed it today and had gains, whatever you want to do. Short the stock, buy the put, do bear call spreads, several strategies to still trade bearish, made money. Yep. Let's remove this. Put this back on weekly. So this strategy is the one that could be applied at multiple time frames. Merck, Mike, Romeo, Kilo. Oof. Yep. Lower, lower, lower high. Now it's in this key demand zone of buyers. We're going to see if this does a reversal trend. It's giving a little signal that buyer stepping in here. So somebody thinks they're bottom fishing, and maybe they get a little retracement, and then it's going to roll over, flush down harder, and they will find out they were wrong. Just because you have money doesn't mean you're right, because some people manage other people's money. Microsoft, Mike, Sierra, Foxtrot, Tango, new low for the year. Yeah, not good. Broke below that consolidation. Not good. Nike, November, Kilo, Echo. Look at that. Lower low, lower high. So it's in that key demand zone, which I had drawn there several weeks ago. Expected to touch that. Yep. Bad shape. It's retail. It's bad shape. That's not leadership. That's bad. Procter Gamble, new low for the year. Broke below the consolidation. Lower low, lower high. Came into this key prior demand zone. Look at that buyer stepped in there. Oh, some people bottom fishing. Going to label these midpoints too. Potential retracement, and then have a further rollover. More flush. Tango, Romeo, Victor, another financial. Well, there's the low for the year. We tested it, but we didn't actually break it yet, so we don't have a new low yet. Took out that swing low as expected. Let's remove it. Yeah, but still bearish bias. Oh, sorry. This is the low of the year. Yeah, we tested that one. Uniform November Hotel. Oof. Right into this demand zone expected, into that swing low. Really bad shape. Visa, new low for the year. Yep, a lot of these financials should be doing good because interest rates and they're doing bad. So that would partly make you wonder, well, raising interest rates, who's it helping? Because it typically helps the financial institutions. Well, these financial institutions had bad policies, what they invested in, the risk they took, bad money management. It's the leadership of these companies that made those choices years ago, and it has consequences now. But don't worry, majority of them are fine because they have balloon packages, living high and mighty right now. They're not struggling. Consequences. VZ for Verizon. Red, lower low, lower high, in retracement phase. So somebody stepped in there and started to buy it. Oops, shame on me. Focus. There we go. We're going to see this demand zone where buyer stepped in. It's going to get a test it and a break. One would expect. Whiskey Bravo Alpha. Oof, new low for the year. Took out that swing low. Let's open this up. And also look at acceleration, breakdown, lower low, lower high. Bad shape. Bad shape. Oof. So that was the low of last year. We tested it and broke below it. It's in worse shape. Who's getting fired? Who's getting disciplined? Oops, wrong one. There we go. Almost done. I know you all got places to go, things to do. Stay focused. One more. Whiskey, Mike, Tango, Walmart. Broke below this consolidation. So trend is down, lower low, lower high, smaller trading range coming into a key demand zone. So notice several of these stocks I showed you had smaller trading ranges. Maybe their worst part is getting over versus these huge bodies. Big difference, big difference. We'll see how it goes. I don't see trade signals on these yet. I'm just saying some of them, people feel they're not, the perspective is, hey, they're not as bad anymore. So no more selling. But the buyers haven't come into proven they're worthy yet. Yeah. Sit on hands is never wrong. Many thanks for watching.